Hello everyone, welcome to the 10 Investor channel. So I've been YouTubing almost for more than a year regularly now, and I've observed that almost 92% of you have not subscribed to my channel yet. Just 8% of people actually who watch my channel have subscribed. So don't forget to subscribe to my channel. I'm sure you've benefited a lot from my channel, or if you've been watching my videos recently, there's a lot I do. So don't forget to hit the subscribe button and subscribe to my channel now. So in this video, we're going to look at 4 SIP stocks and with a bonus SIP stock for you. And I'm going to also show you why SIP stocks are actually a good thing to do for your portfolio and how it actually can outperform mutual funds in the long run. Okay, so I'm going to take the example of the SIP stocks I posted back in November 2021. And we're going to look at what was the actual percentage returns and how did the portfolio actually do, together as a SIP portfolio, how did it actually do? And how did it compare or perform against the mutual funds, large cap mutual funds? And then we'll take a look at these 4 SIP stocks for today, including the bonus stock. So let's jump into the video without wasting more time. So the first thing I wanted to discuss is the SIP stocks I posted back in November 2018. And if you see, the portfolio is up 9%, right? Now, in the same time, I'll also tell you how much the large cap mutual funds have performed. But before that, I want to show you, I recommended Airtel, Hero MotoCorp, ITC, State Bank, and also United Spirits. Now, whenever I recommend a SIP stock, I look at stocks which just about to start a long-term uptrend, and that's one of the reasons also why there's a high chance that at least 40 to 50% of the stocks, or in 60 to 70% of the stocks, might do well. In this case, almost all out of 4 stocks have done really well. Almost 80% of the stocks have done really well, and these are the recommended levels over here. And this was the lowest price that they hit after I recommended. Now, it's very important for the SIP to not immediately start moving ahead, because then you cannot accumulate a good amount of stocks in your portfolio. And here, if you see, Airtel was down almost 10% at some time, Hero MotoCorp around 18%, ITC around 6%, State Bank around 20%, and United Spirits 25%. So I'm looking for stocks which do not fall a lot. So I'm not looking to buy stocks which have already hit an all-time high, but rather I'm looking at stocks which are hitting or which are about to turn and reverse from lows, right? And that's why the maximum downside is limited and also the upside is unlimited, right? So here, if you see in terms of absolute returns, ITC did the best of all, 41%, followed by Hero MotoCorp, Airtel, United Spirits down 16%. But look at the SIP returns. Even though almost only 3 stocks performed in terms of absolute returns, in terms of SIP returns, 4 stocks gave more than 0% returns, right? And that's because stocks, when they go down, you accumulate more of them. And if they stay down for some time before they reverse and head up, then you accumulate more and more of the shares. So as a result, even though ITC was up 41%, the SIP return is down at 27%, because ITC has been moving up very strongly in the last 3 months. Whereas stocks like Hero MotoCorp or State Bank, even though the absolute returns were not much higher, the SIP returns actually were higher than the absolute returns. Now, that's the benefit of SIP returns. So if you're a new investor, if you're struggling in markets, and if you do not know much about stocks, and if you want to learn about stocks, SIP is the best way to start learning about stock investing. Start off with the stocks that you select, go with large cap stocks, and you will see how they perform markets. So in this case, the portfolio is up 9% compared to an average of 4 to 5% that we had in large cap mutual funds. So I've taken the direct money control data from here, direct plans, and almost all large cap funds. And if you see, except Nippon, none of them have actually given anything, above 4-5%. So average 4-5%. So there's a very high chance your mutual fund outperformance, the actual SIP outperformance is much higher than the mutual funds outperformance. Okay, so that's the thing I wanted to tell you, because today we're going to look at our SIP stocks, 4 SIP stocks. So let's jump into them. The first stock I want to look at today is Dr. Reddy's. Now, all the stocks I select are large cap stocks, pretty good companies. They've done well in the past. So Dr. Reddy's is one of them. If you look at the ROC, it's doing pretty well, 14%, 11%, and PE is around 24%. So for me, the stock is still okay. It's not very overvalued. The stock has not been doing well since the last few years. And shareholding pattern, if you see here, DIs have been lapping onto the Dr. Reddy's in the last 1 year. So they've gone up from 14% shareholding in this company to 25%, whereas the public has, given away the shares pretty high. So that's a very good sign, because public doesn't have confidence, whereas DIs or big money has confidence in this company. And if you look at the overall trend in terms of the annual sales, Dr. Reddy actually has done pretty good since 2019. So we've gone up from 15,000 crores sales to almost, or if you look at the trailing 12 months, we're almost hitting 22,000 crores. Also, the PAT and the operating margin is finally probably looking to stabilize. So we're around 17-18% mark. Historically, we've been 24, 23%, 24%, but of late we are almost back to those previous all-time high PAT levels. Right. So as a result, the sales growth has been growing at the 3%, 12% CAGR, and profit has been growing at 5% CAGR. So last few quarter results have been excellent, and I feel that Dr. Reddy's, in terms of fundamentally the numbers, I think it has made a bottom, and it might do well going forward. So looking at the technicals, so technicals is always, you want to consider technicals, especially in SIP stocks, because you don't want to buy when a stock is already hitting all-time high, but rather you want to buy a stock which is starting to show signs of reversals, and then you assume that the stock will move slowly up, and you buy the SIP stocks, right? So this case, I'm looking at the monthly chart, and this is a perfect channel for Dr. Reddy's, and it has been going up pretty much since 2006, or even after listing. Right, so overall, this is the long-term trend for the stock is up on the monthly charts, and I'm trying to now catch the short-term trend, which is just about to start reverse and head higher. Right, so in this case, price is still available at 22,050 levels, which means for the last 7 years, Dr. Reddy's has not done really well, and it has not given any returns, and we are seeing some kind of reversal right now, because last 7 months there has been a tight consolidation in terms of price, and there is lower VIX, which is indicating demand in Dr. Reddy's. So we are looking at the monthly charts, and if the stock does well, we're going to look at targets of 10,000 in the next 3 to 5 years. Right, so right now the stock is trading at around 4,300 levels, so that's almost 2x from here, slightly more than 2.2, 2.3x from here, and we are looking at a very good potential SIP stock at this point. Okay, so that's from a SIP perspective. I'm also going to cover from a swing trading perspective, or position trading, what you should do. So I'm taking daily chart for that reason. So in daily charts, if you see, the stock has severe resistance or major resistance around 4,400 levels. We did have a breakout in the month of July, and then we kind of reversed back down to the lower end of this trend line support. We did not cross below these previous swing lows. So for me, the higher high, higher low trend is on, and it has just started. And for me, Dr. Reddy's is a very good position trading bet. Also remember this gap down that we had here, we had with high volumes, but we reversed. After the gap down, we did not have follow through, which means that was a panic sell, probably last buy button for the DIs we had. And now we also to head higher. So what should be your entry price? You enter a current market price, and we're going to look for targets of 4,900 or 5,500 levels with a stop loss at 4,040, which is the recent swing low. Okay, that's a 6% stop, and we're looking at targets of 4,900 or 5,500, which means you're looking at least 12% return or 24% return if you consider second target. So always try to ride the trends as much as possible. That might help you actually gain some really big moves. So that's the first talk. Do let me know in the comments what are your thoughts on my SIP performance, and if you have been doing SIP on my stocks, do let me know as well. The second stock that we're going to take a look at today is Bosch from the automobile space. So again, Bosch is a very good company, except that it has not done well in the last 7 years. So again, take a look at the fundamentals and see what the stock is doing. So PE is around 41. It's a pretty large cap company again. ROC is 14%, ROE is 11%. It has pretty good cash in its books. And here again, DIs have been lapping onto the shares since June 2020. So until June 2020, they were holding a 13% stake in the company, and today they're holding a 16.5% stake in this company. FIs have offloaded, but for me, that's not a problem. Promoters have been holding very steady shares, and DIs have been lapping onto the shares. So for me, again, signs of good signs in this company. And also, if you look at the trailing 12 months sales, they have again hit an all-time high after many years, right? Since 2015, the sales has been pretty stagnant, 12,000, 9,000 crore mark, and finally they've crossed that number in the last 12 months. Whereas the margins have taken a hit, right? So that's probably, we've hit a bottom here in terms of margin. We've been doing a 12% margin in the last few quarters, probably because of the slowing demand in the automobile industry or in the overall machinery industry, right? So here, PAT also is low. Sales hit an all-time high, and I think that in terms of operating margin, the stock has hit a bottom, and we might probably head higher again in terms of even operational efficiency. But the last quarter results have been very good, and as I mentioned, sales and profit have not been doing well, but probably that's the end. This quarter or this year was probably the bottom, and we might head higher from here. But from a technical perspective, the stock looks excellent, because I feel a major downtrend is done. So we had a major move from 2009 to 2015. Then we had a major drop. Now, that's a very important thing that happens in markets. You always have stocks correcting before they start the next leg up in terms of technical analysis, right? So we have forming a 3-year inverted head and shoulders. Now that's one of my favorite pattern. And if you break out from here, that signifies the bottom of that confirms the bottom of Bosch share price, and also it will signal that the 70 downtrend is complete and we are probably headed back towards all-time highs, right? So that's why this is a SIP candidate for me. And also, if you look at this chart over here, we did not we started forming higher highs on the weekly charts. On the monthly charts, we're already having higher highs, so we have not broken this previous being low. So for me, that's still a major uptrend in the monthly charts. On the weekly charts, we were in downtrend, but now we are going to head back higher again. Okay, so if we do well in terms of the stock itself, then we're looking at targets of 50,000 in the next 3 to 5 years, which is almost 2.5x from here. We're right now at 18,000 levels, so 2.5x from here. And if you do a SIP portfolio, it's going to do excellent for your portfolio. So that's the monthly view. Looking at the daily view, the stock had a breakout recently. We had some tight consolidations. Again, we're having tight consolidations. So for me, we buy above that point, which means you buy above 18,200 with a stop loss of 17,000, which is around 6.6%. And we're looking for targets of 22,500, which is almost 20% returns from here, which is 3.6% the risk that you're going to take. So that's from a swing trading or position trading perspective. So that's the second stock that I wanted to cover today. So the third stock we wanted to cover today is LIC Housing Finance Limited. Now, this is one of the excellent stocks from the 4-5 stocks that we're going to discuss today. So the reason is LIC has not done really well, compared to a lot of other financing companies. It has been correcting since the last few years. And if you look at the ROC and ROE, it is pretty good, whereas stock P is just at 7, right? Even if you consider the book value is 450, whereas the market share, current market price is around 400 levels. So in terms of book value, it's definitely undervalued. Here, promoters have lapped up. LIC has bought an additional 5% in the last 1 year or so. And also, if you see, DIs have gone up from 10% to almost 20%. Now, that's again very, very interesting. FIs have offloaded, but DIs also have lapped onto that share. Public also has lost some share in the last quarter. That's because DIs have have bought more shares. So if you look at the last 2 quarters, PAT, it's been excellent. Again, all these companies, if you see, I'm looking at a pattern, right? I want good PAT. I want some signs of revival. I want some signs of stock price bottoming out, and that's when I do SIP in these stocks. So if you see, we've seen a steady growth in LIC Housing Finance since 2010. So for me, nothing to really worry about. Even in terms of fundamentals or PAT margins, or if you see even the overall net profit, for me, this is the best company out of all the companies that we're looking at today, because there's been consistent growth in sales, consistent growth in PAT, not much problem in the operating margin. So overall, the sales has been growing at a 5% CAGR in the last 3 years. Profit growth in the last 3 years have not been good, but look at the 12 months trailing, right? We've almost hit all-time high PAT. So for me, that's why it makes it a very good SIP candidate. Looking at technicals, as I said, I always look at the long-term charts. Monthly chart is up still. We are in a very long-term uptrend. We've retested the breakout zone over here, which is also the channel support. And we are in a 5-year downtrend since almost 2017 levels, right? And we are forming inverted head and shoulders again here. And we are looking at a major, major breakout. And if we break out from here in terms of the price, then we're looking at targets of almost 1,000 in 3.5 years. Now we are at 400, so it's almost 2.5 times the current market price, and that's why I'm recommending this today as a SIP candidate. Now, from a short-term or a swing trading perspective, I'm seeing a very strong major resistance here around the levels of 400, 410. So we're going to buy only above that with the stop loss around this level, right? So which means I'm going to buy at 402, or even you can buy at 405 with the stop loss of 360, which is around 10%. I'm going to look for targets of 535, which is almost 30% returns from here. And do not go more than 5% of portfolio, especially if you're a beginner in markets. Okay, so that's the third stock I want to discuss today from a SIP perspective and a swing trading perspective. Now, if you like me covering both the SIP plus the swing trading perspective or a position trading perspective, do let me know in the comments, because I am thinking of also doing such kind of videos along with all other learning videos as well. Okay, so let's move to the fourth stock for today, which is Glenmark. Glenmark, I'm sure a lot of you are raising eyebrows saying, oh, the stock has not been doing well for many years, right? Since 2008, it has not given returns. In terms of sales, PAT, it has been doing okay-ish, not very strong growth numbers there. But yes, probably we are looking at a bottom in terms of the fundamental performance here. we are growing steadily, but not a very strong growth. But yeah, we have been growing year on year, and I feel the stock has not done well since 2008, right? So since 2011, if you see here, we have grown in terms of sales, but the stock has not done well. Remember, there is a very strong potential this stock can outperform going forward if the pharma sector as a sector does well, right? So the PAT margins have been also stable. The operating margins have been stable, and also the net profit has been kind of hitting an all-time high. Yes, I agree. 2017 we had a very good operating margin, 22%, but now it has not done well. But still, I think we are stabilizing around 16-19% mark, and I think it might do well going forward. So in terms of sales and PAT growth, we've done very well in the last 3 years. CAGR of 8%, 10%, but the stock has not doing well. Okay, so that's why I'm covering this stock today. So fundamentally, ROC is around 16%, ROE around 13%, P is 11%. So for me, I always have this rule that the P should at least trade close to ROCE if there's decent sales and PAT growth. Okay, so in terms of the shareholding, again, DIs have bought these shares. Now, if you look at all these three shares, all the four shares I'm talking about today, all stocks have been bought up by DI. Yes, FIs have reduced stake, but here FIs don't reduce stake that much. So for me, overall, this stock again looks good from a fundamental perspective. So technically, if you look at again, I'm looking at a channel here. Channel is a perfect channel, especially given that there has been support around the middle of the channel, and then you kind of break down. We've tested the lower end, and again we are retesting this breakout. We had a breakout sometime last year in 2021, and we're retesting that breakout. And if you see, we see a doji here, and we are seeing a good monthly candle this month. We still have half the month to go, but for me, that's still a decent reversal from here. And price is trading at 2008 level, so which means since 2008, 14-15 years, we've not seen any returns in the stock. So it's a 14-year price consolidation. The price has just gone sideways overall, right? So even though we have some good ups and downs, overall since 2008, there's not been much returns. It's kind of stable. So if the stock does well, we're looking at targets of 1200 in 3 to 5 years. Now, this is the best of all the three stocks in terms of returns that I'm looking at, so which is almost 3x returns from here in the next 3 to 5 years. And it might do well, really well, if the pharma industry does well, and if Glenmark company has a good strategy, then definitely yes, it's going to do well. So from a short-term trend up, the trend is up. We are just breaking out today. In fact, on Wednesday with volumes, we are seeing some good volumes. The stock has been going sideways for quite some time. It looks like a symmetrical triangle breakout, and with some really good candles, green candles everywhere, except for this one day here and one day here. Almost we are seeing some signs of bullishness, and I think a short-term trend is definitely going up now from a downtrend, right? So that's why I'm looking at this stock today. So you buy at current market price of 403 with a stop loss of around 10%, and we're looking for targets of 30% runs from here, which is around 540 from here. So that's from a short-term swing trading perspective. So these are the 4 stocks I wanted to cover today. Now let's look at the bonus stock that I have for you today. So the bonus stock is Muthoot Finance from even a short-term trading and a SIP trading perspective, right? So this is a perfect channel for my opinion. Do let me know what you think of this channel. But here, if you see, we had reversals, and we also are seeing reversals at the low end. So for me, that's the 4th stock I wanted to cover today in this video, bonus stock that I'm giving you today. So I hope you like this video, a very different video SIP video. Do let me know what you like in the comments, and don't forget to subscribe to my channel and if you like this video. So I'll leave you here. Take care, stay safe and trade safe until I see you in another video. Bye-bye.